So one of the main things when you get into commercial real estate investment is that you know you're getting a good deal. Today I'm going to tell you how to analyze a deal real quickly and understand if it's something you need to get into or not. My name's Jeremy Mercer. I'm the CEO of Matador Capital. In my career, I've brokered over 9 million square feet of commercial property and over a total of 300 million in transaction volume. Last year, I purchased $35 million in assets, and this year I'm on pace to purchase 100 million in assets. And I'm here to help you understand how to get into commercial real estate investments. Okay, so evaluating a property. What's the first thing anyone's ever heard in real estate? Location, location, location. Location is always extremely important, whether you're infill, closer to the core of a major metropolitan area, or you're out on the tertiary. Maybe you're off, in an area where there's not much near you. I've bought both of them and they both have their different issues. Tertiary markets, you can get higher yields in them, but sometimes re-tenanting them takes a lot longer time frame. The more infill location can get filled quickly. You have a lot larger tenant base coming to the property, but they are usually highly more sought after by other investors as well, so the returns are lower on them. So another thing you can evaluate is the classification of the building, Class A, B, or C. So Class A are going to be your big, bright, shiny object type buildings. The issue with getting into these types of buildings is it's usually bought by institutional investors, which are going to be private pension funds, larger private equity firms that you just really can't compete with when you're getting into it. These trade on lower yields, and that's because those types of institutions, they have a different borrowing base than you do. They can borrow money a lot differently than you can, and their return structure is a lot different than what you as an individual probably are hoping to achieve. Another thing to consider when evaluating these properties are the tangible attributes of the property. Does the property have a good clear height in it? If it's an industrial building, or does it have a great feature of an office park? Or as a retail location, does the area have incoming growth that are going to need the support of a retail center to give them, all the goods and services that a retail center provides? Another thing is, a thing that I love with properties is an additional land component. I think if there's some kind of additional land with a property, it's always desirable. So when you're looking and evaluating these properties, you think about the location, think about the tenant base that'll make up and go into that location, think about the factors around you in the area that will help drive the tenant base to that facility. And then once you get under contract, do all your due diligence. Do a property condition assessment. Do an environmental report. Compare it to all comparable sales and comparable rental properties in the area. And then also you'll do an appraisal. So this is a broad overview on how you evaluate a commercial property and if you're going to get into it. It might not be something you do every day, but I do this all day, every day. So if this is something you're interested in and want to learn more about, please shoot me a DM, leave me a comment. My name's Jeremy Mercer. I'm here to help you understand how to get into commercial real estate investments.